once mighty pastoral house Elders has seen better days. In June, the company's already low share price was sliced in half after announcing it wouldn't make the profit it had forecast. In fact, it would post a loss. So what happened? And how is Chief Executive Malcolm Jackman going to pull Elders out of its latest mess? Prue Adams takes a look at the trials and tribulations of the 170-year-old company.
They're a fixture at every sale yard, the Red Army who work for Elders.
Right way out there, 130, 30, 25, 25, 30, you're in a shot. 130, 30, 130, you're going to hold.
But a few weeks back, as lambs were going under the hammer at the Dublin sale yards north of Adelaide, there was one bloke in red who literally stood half a head above the rest. He's the commanding officer, Malcolm Jackman.
So most of this will go to smelting.
Being a New Zealander and also head of one of Australia's oldest agri-businesses, you might think he knows his way around a sheep sale. He doesn't, but firmly believes it doesn't matter either.
I don't come off the land, I don't have an agricultural background. I was hired for my ability to manage the company rather than necessarily run the business.
Given the recent forecast loss, how well do you think you're going at running the company, not the business?
The scorecard looks pretty lousy at the moment, quite frankly, from a shareholders and investors' point of view. I still think we have huge relevance in the bush, and I see that day to day, and you see it in the numbers of what we do for our customers out there. But we're on a journey. It's a tough journey, and we've stumbled badly at the moment, and we're picking ourselves up by our bootstraps and going forward.
The journey for Elders has indeed been long and sometimes tortured. Thomas Elder was a Scotsman who followed his brothers to Australia in the 1830s. They saw an opportunity for trade in the brand new colony of South Australia. Before long, Thomas Elder had joined with his brother-in-law, Robert Barr Smith, to form Elder Smith & Co. They sold provisions to the Victorian gold miners and came up with the idea to import camels as a means of transporting supplies across the outback. By 1880, when this remarkable old photo was taken, they'd built the first wool and grain warehouse at Port Adelaide. As one century turned over into another, they expanded their agencies into Western Australia. The company rode out the Great Depression and the cessation of the wool trade during 2 world wars. By the 1960s, Elders had merged with the third biggest wool-broking house, Goldsboro Mort. During the next 2 decades, wool was in demand, and Elders GM had edged out rival Dalgetty's to be the leading broker in the land. But a failure to move with the times meant Elders Goldsboro Mort was looking a little threadbare by the 1980s.
The financial world saw the takeover of Elders GM as inevitable, an old established pastoral company rich in assets.
Waiting in the wings was a larger-than-life young Turk from Melbourne who had control of a jam and sauce company.
The mastermind behind all this is the shy wizard of the takeover world, John Elliott, managing director of Elders IXL.
We see the pastoral business of Elders being the core business of the whole group.
During the 80s, John Elliott was rarely out of the spotlight. He was Carlton football president, owner of the nation's biggest brewer, and Liberal Party president.
Under the Elliott control, Elders IXL has become the biggest rural conglomerate this country has ever had. It has a finger in almost every aspect of Australian agriculture. It markets more than half the entire Australian wool clip, and there's much more. from livestock to real estate, shipping to stockbroking. Elders IXL now employs about 24,000 people, 4,000 of them overseas, from marketing in the USSR to growing pineapples on the east coast of Africa.
With cash flow from beer, resources and farming, Elders IXL seemed set for a golden age.
500, thank you, sir.
But again, trouble was just around the corner. A badly botched management takeover saw Elliott and the company lose tens of millions of dollars and set Elders on a downward spiral.
The giant Elders pastoral company is restructuring its operations all around the country. 100 Elders workers have lost or are about to lose their jobs.
Present-day employees who survived the Elliott years remember them with a mix of fondness and disdain.
Very interesting, very dynamic and forthgoing in the early stages, and then towards the end it obviously sad with how things finished up.
Bruce Cameron runs the Roseworthy branch in South Australia. He's worn the red jumper for almost 3 decades and has seen Elders change name and tack several times. He has some faith the current boss will bring the company back to its rural roots.
In my 29 years, I'd say he's been the most accessible CEO in my time. Staff seem to be very confident in his attitude.
Malcolm Jackman has a reputation as a turnaround merchant. A New Zealand naval officer by trade, he'd managed equipment rental business Coates and was snapped up by Elders in 2008.
Elders has become, and with Futurus particularly, this very complicated beast that people didn't quite know, A, what business we're in and where they fitted in the business.
Les Watsnitska has been head of Futurus for 5 years.
Mr Jackman's opportunity came off the back of the resignation of Les Watsnitska, a man who'd risen through the ranks after Elders was bought by automotive company Futurus. The former chief executive took the company in several different directions, not just agriculture, but also forestry, telecommunications and automotive parts, as Lateline Business reported 2 years ago.
Analysts say the numerous acquisitions have distorted the direction of the company.
It was already a difficult business to understand. It's become much more difficult to understand since he arrived, as they've added all of these businesses to the stable, and quite different businesses as well.
Yeah, Bruce, how are you, mate? Yeah, it's good to see you.
The current chief executive changed the name back to Elders, and late last year, through an equity raising exercise, stumped up more than $500 million to pay down debt and strengthen the bottom line. With shares going for $1.50, the company promised a $55 million profit in the coming year. But 2 revisions later, it's now forecasting a loss of up to $14 million. The company blames a number of factors: low real estate prices, no market for their forestry schemes, but mostly they say cheap fertiliser and agricultural chemicals sliced into their profit. The company relies heavily on farmers putting in their crops in April. Good weather conditions meant that part went to plan, but while ag chem volumes were up, profits were down.
People spent early and spent big because the prices were so good, and there was no money left in the coffers when it came to May, June, so the spend has just evaporated.
Good afternoon, the Australian Shareholders Association.
The prospective loss came as a devastating blow for shareholders. Elders' stock fell below 40 cents for the first time in nearly 30 years.
Shareholders have really no faith in the forecasting ability of management and have begun to question the quality of management overall.
In hindsight, was that sort of recapitalisation, that raising capital last year, a mistake?
Let me tell you that if we had not recapitalised the company, Elders would be dead. And so the short-term memory of people have, and without blowing my own trumpet, without us, the company, under my leadership as the CEO, if we had not recapped or refinanced the company, there would have been no Elders in Australia at Christmas Day last year.
I think if they hadn't have recapitalised, they would be dead right now. It was the right move to inject some new capital into the company. Otherwise, its bankers simply would have shut the company down. However, when you are raising capital off investors, you have to put out some forecast as to what sort of profits you might be making in the next year or so. And it's the complete inability of the company to accurately forecast those profits that has shareholders so riled at the moment.
You say you are in turnaround, but those shares were $1.50 and they're now down to sort of less than 50 cents, and they've been down a lot lower. So where's the indication of the turnaround?
There isn't one at the moment, okay? So that's very, very true statement, Prue, and absolutely correct, is that we came out with a prospectus. We said this was the plan, this is what we expected to happen, and it hasn't happened the way we expected it to happen. And now, so we've taken one very deep breath, and we are adjusting the business plan on the way through.
61, 61, 101, 61, bidding, done, sell them, done, 60 straight to go to.
That adjustment has meant Mr Jackman has taken over the Rural Services Division. 2 layers of management have been removed, and since completing our interview, share prices have risen, with a major parcel purchased by the Bank of America. The boss says most of the country branches will be maintained, but he wants to make cuts of around $45 million. And that means losing 10% of the workforce, mostly by attrition and through what's being called performance management. The focus on chemical sales is said to be too narrow and will be broadened.
We fundamentally need to reset the cost base of this company, because I don't believe there's going to be this radical change and we'll return to normal conditions, say, in 12 months' time.
When you travel the regions as much as we do in the Landline team, you hear time and again that there is an old-fashioned feeling of goodwill towards the Elders brand. But the service and the customer interaction is often disappointing. The boss has also heard those criticisms and in the last few weeks has committed to beefing up the sales team.
I think we put too many opportunities in the ways of people to do things that aren't sales related, too much admin, too much this, too much that. We've got regional sales managers who by the time head office bloody gets to them, the S in their title gets to be